Okay. So with that being said, hey, Amy, did you want to kind of kick this one off this time and start talking about suitability here?
Right, yeah, sure. So welcome everybody. So suitability, all of our favorite topics. So as you know, when you submit an application, it comes directly to Jennifer and I. We take that application usually within 24 hours, way sooner than that, but 24 hours is our expected. We review it for any suitability inquiries, flags, questions, not in good order items. If we find those, we send you an email and we ask in very detail, if we need corrections, what kind of corrections. If it's approved, you get an email saying it's approved and we've submitted it. And then we do additional review on any additional deposits. So as you know, with our Emeritus products, you can add money in the first year. Any requests for additional money, whether it's coming from the client, a mutual fund account, annuity, anything like that, comes back to Jennifer and I to re-review for suitability. And at that point, we would either reach out to you and let you know if there's something needed, if it's typically a replacement, or if there's some issues with the additional funds in regards to their liquidity. So that is in a nutshell, what we do when we get an application. We'll be going into more detail with the next slides.
Sure. And then
Amy,
one
hey,
thing.
Jennifer and Amy, do you mind if I pause real quick here? Because I think this is a really good point of what you said there as far as like adding additional funds team. Over the course of the last couple of months, we've definitely seen, I think Pearl Moffitt was on here. I think I saw Pearl Jeff, I think Pearl's on here. So yeah, we added some additional funds. So make sure that, when you're adding funds, you're reaching out to Amy and reaching out to Jennifer, our partners, to make sure that, when you're doing that from a suitability perspective, everything is in good order. So I know that we've had a lot of those lately. I didn't want to make sure that we glossed over that. Wanted to make sure that that was something that we bring to everybody's attention. And also questions, please ask them in the chat. I'm monitoring the chat. So if you have some questions, I want to make sure that we get those answered. It's important. So raise your hand, ask those questions, put them in the chat. I'll monitor the chat, and then I'll turn it over to Jennifer and Amy for some of those answers. So thank you, guys. Go ahead.
Yep. Thank you, Joe.
Jen, did you have anything to add to that?
I didn't. No, you covered that pretty well. Yes. So go ahead. Okay.
So for suitability, liquid assets we define as, and I'm sure you've all seen the suitability form, any non-qualified purchase where there is no surrender fees or charges being incurred, regardless of the owner's age. So this could be checking, savings, a mutual fund account, a non-qualified annuity or life insurance policy where there's no charges being incurred to the client. That is considered a liquid asset. For qualified, we can consider a liquid asset if no surrender fees and or charges are incurred and the owner is age 59 and a half or over. So for qualified funds, again, anything that's coming, maybe they have an IRA CD, maybe they have an IRA mutual fund brokerage account, or an annuity. As long as there's no charges, that is considered a liquid asset being moved. And then non-liquid assets are defined as any non-qualified purchase where there's surrender charges or fees being incurred regardless of the owner's age. Now, I want to stress that it could be surrender charges, it could be a negative MVA, it could be a bonus recapture, anything that's going to take away from that pool of money that the client's moving over is going to be considered a non-liquid asset. So any kind of fees like that are going to be considered along with surrender charges. For qualified, if the owner is under age 59 and a half, the asset is considered non-liquid, even if there's no fees or charges being incurred. The qualified assets for owners age 59 and a half are always considered non-liquid, and that is because of the additional taxation of them taking a distribution. So that is why any qualified asset for 59.5 are always considered non-liquid. And then other examples of non-liquid assets that you want to make sure are placed in the non-liquid asset section is any kind of real estate outside of their primary residence, automobiles, jewelry, collector art, an RV, cattle, lumber, anything that can't be sold off super quick is considered a non-liquid asset. So business assets, sometimes we see those in liquid assets. Those really shouldn't be on the suitability form, but if the client wants them on there, they should really be considered non-liquid. Jen, anything to add?
No,
Okay.
that sounds good to me. I had nothing to add.
Okay.
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 All right.
Next slide.
Yeah, so next slide. So here's some of the more common, not in good order items that we do see on the suitability form or just globally with respect to suitability. And then this is in no particular order, but assets are listed incorrectly. So sometimes we're seeing assets that would be considered a liquid asset listed in non-liquid and vice versa. So that's why we kind of went over what's considered liquid versus non-liquid to help everyone better understand how to categorize those types of assets appropriately. Annuity purchase amount is included in liquid or non-liquid assets. So the form specifically says that the asset should not be included below. And so we have to be really careful to not include them. And this holds true. And I think there's a lot of confusion that takes place when you're taking more than one application for the owner or the owner's household at the same time. Or in very close proximity to each other. So if you're taking two applications, let's say on Amy Lewis, and she has qualified money and non-qualified money, and you're taking them both at the same time, when you're completing both suitability forms, it's really important to deduct the annuity purchase amounts for both cases from the client's assets and not list them in liquid or non-liquid. So essentially what that means is your suitability form is looking identical with respect to liquid, non-liquid assets, income, expenses, maybe debts, liabilities is going to be completely the same. The only difference is going to be line item number 1, which is going to specify what the purchase amount is for that particular application. Another big one is that the owner indicates they have existing life insurance or annuities, and there's no such asset listed. Or number 4, they say they do not have it, but then when Amy and I are going to page 1 of the suitability form, we're seeing line items for annuities, life insurance, or what have you. So it's very, very important that you monitor the way that you are completing the owner's replacement questions as well as your own on the application. And those are typically questions 8A and 8B, and then 14A and 14B of the application itself, and making sure that your answers are coinciding with the assets that are listed on page 1 of the suitability form. Source of premium indicated for question 19 is incorrect. I had a case where this was the situation just this week. Source of premium was marked mutual fund. However, it was really an annuity. And when that happens, page 3 of the suitability form, which is the grid where you provide the existing insurance company's key pieces of information, does not open up. So in this circumstance, the agent had to go back out to the client, get corrections, all that kind of stuff. So it's very important that the source of premium that you're indicating for question 19 on the suitability form coincides with the money that you're actually using. And I'll go one step further. If there's multiple sources, so let's say we're doing an annuity, let's say we're doing a mutual fund and a CD, all sources should be marked for that question. Page 3 does not contain all of the correct information for the replacing annuity. Big one that we see is that it's marked none for enhanced benefits. We get a copy of the statement. We're seeing it has an income rider. Or for guaranteed minimum or the current fixed account, we're seeing zeros listed there. But we're in a fixed indexed annuity wherein we know that typically fixed indexed annuities do have a guaranteed minimum as well as a fixed account. So again, I'll go ahead and put another plug in for the importance of obtaining a copy of the most recent statement that that's associated with the replacement that you're doing, and the importance of calling the existing company to make sure that you understand exactly what the client is replacing. So making sure that you're getting those key pieces of information. Not only is it important for you to be able to make the determination as to whether or not the transaction is in the client's best interest, but it's also important in order to be able to complete page 3 of the suitability form. Another one that we see is the rationale for the replacement is inadequate. Sometimes we just see a one-liner, client wanted out because they were done with this company. That really doesn't give us the story behind the sale. We really need to better understand where the client was at, where they're going to, and why this annuity is so much better and why it's in their best interest to make this move. And then lastly is on page 5 of the suitability form. These questions pertain to qualified distributions, rollovers, or direct transfers. And a lot of times what we're seeing is question 5 is asking if the fees or charges that the existing annuity are, for the new annuity are going to be higher than where they're at. Sometimes when we are allocating funds to, let's say, a pay for income rider, those questions are being marked no. I think it's out of habit. However, when we're doing a replacement, there's no fees or charges. So you have to really make sure that you're paying attention to that question. And if the fees and charges on the emeritus annuity are going to be higher, you need to make sure you're marking that question yes, and then selecting the appropriate reasons why it's in the client's best interest to pay a fee in order to meet their needs and objectives. So Amy, did you have anything else to add to that?
I mean, the only thing I was going to say is a couple things going back to, because I've had a few of them in the past week, on the questions about existing life insurance or annuities. So the situation that I'm having is they're marking no, the client doesn't have any existing, and then there's an asset on there. And what this does is it creates the correction on the application, but it also, in some of these states, requires a replacement notice regardless of replacement, that if they would have marked yes would have been generated with the app packet. So it's having to go back out to the client, get corrections, having to get a replacement notice. And so, I just want to stress the importance of making sure the information you're providing is coinciding with other places in the documents. Also, I do find, the rationale might say, they're moving away to get away from fees. But then on page 3 of the suitability form, the fees are 0. So that's going to generate a correction or a clarification. So just making sure that the information throughout the completion of the app packet is all making sense and flowing and consistent.
Yeah,
just
that
stressing
makes,
that.
that makes sense.
Actually,
Oh, Chris, you're muted.
can you hear me now?
Yes.
Okay, sorry. I was just recently at an industry event, and there was a panel of advisors, financial services professionals, and the purpose of the panel was really to avoid the friction in the annuity sales process. And, there were a number of agents, and there are probably agents that do 20 or 30 million a year in annuity premium. And the consistent message for them was anytime there are NIGOs and I have to go back to a client and have them re-sign or redate information, they start to question my abilities and my skills, and do they want to do business? And so I think, you know, part of this, both the training that we did last week and then this week, is really to avoid that friction in the sales process, to eliminate, you know, not in good order applications. So when it comes in, it can be reviewed, the transfer can be sent out as quickly as possible, the case gets funded, it gets issued, you all get paid commissions. So that's really the purpose of some of these discussions, because again, I took away from it that, and again, these are agents that, you know, have large staffs and do significant amount of premium, is anytime there is something that forces them to go back to the client, it can jeopardize the sale.
Yep.
Yep. Okay, so now let's kind of get into a little bit about the suitability and best interest guidelines and what circumstances would be subject to additional scrutiny. So if you have a client who has debts and liabilities that exceed their net worth in comparison to liquid assets, then, you know, we're going to ask some more questions about that, right? Because we're going to want to ensure that the client is able to satisfy those debts and liabilities without maybe accessing their annuity prematurely. If your client has no or a negative monthly disposable income, we're going to question that as well. Obviously, we want to ensure that your client is able to meet their bills and their monthly needs without, again, accessing the annuity prematurely. If a client has little to no liquid assets, we're going to make outreach and an aggressive risk tolerance. If the application involves a replacement, I think kind of based on the last training we did and the rabbit hole we're going down right now, is that replacement by law has to be scrutinized. So, you know, the more information, the better story behind the sale that you can provide makes the job of suitability and mine and Amy's life a little bit easier. If you're using a high percentage of the client's liquid assets for the annuity purchase, you're going to hear from us. And then if a client has replaced other life insurance or annuities in the last 60 months, you know, we're going to ask some questions about that. You know, if, you know, the explanation for those prior replacements is not sufficient. Did you have anything to add to that, Amy?
No, I think the last thing that, you know, the replacement in the 60 months is, you know, there's a section on the suitability form that asks, generally what we're looking for is, you know, what company to what company and what year. We don't need a ton of detail. Where this comes in, you know, for us as extra scrutiny is if the client is replacing an annuity that hasn't been in force for 60 months. That's going to get heavily scrutinized. And so, you know, we want to make sure, you know, that if there's a valid reason for it, you're going to really need to make your case on that, because with the best interest rules, the look back period now is 60 months. So anything over 3 years, anything under 3 years, we're going to have a hard time with. Anything between 36 and 60 months is going to be extra scrutiny. So those are just things to keep in mind.
Yep. Okay, Amy, did you kind of want to go over what the auto declines are?
Yeah, so the automatic declines are if the client is residing in a hospital, hospice facility, or a nursing home. Those are automatic declines. Assisted living, you know, we're going to look at those a little bit more closely. We might have some additional questions on assisted living. You know, why are they there? Do they have any, you know, health issues? You know, maybe they're just there for a senior living community. Those are some questions that we're going to ask. If a client has been diagnosed with a terminal illness or cognitive impairment, Alzheimer's is an automatic decline. Dementia, you know, we have to send those over to home office, scrutinize those a little bit more. But anybody with a diminished life expectancy, a long-term investment like an annuity is not the proper investment. If the client has little to no liquid assets for emergencies, this is where we're going to either decline the case, or if it's coming from a liquid asset, we're going to ask for a reduced purchase, keeping additional assets in case of emergencies. If they are using any funds from a reverse mortgage or home equity line of credit to purchase the annuity, that's a no-go. Replacing funds involving the same agent and the same funds within 60 months. I kind of just touched on this. Those are usually going to be a decline. There might be some extenuating circumstances we can send to home office, but really we want to be looking at this. You shouldn't be replacing something if you were the writing agent and 3 years later now they're something else. If you have questions on that, you should definitely reach out to Jen and I to discuss, and we can let you know if that's something that maybe we can look at or not. And then is replacing a product that will incur a penalty without a reasonable basis or established reason why it's in the owner's best interest, and how it will provide a better economic benefit to the client. So, you know, if we're looking at things that have surrender charges in the double digits, those typically are going to be a decline. The published guidelines are 5%, but we have a little bit of wiggle room there. So if you have, you know, a situation again where you have a little bit higher of a surrender charge, you know, feel free to reach out to Jen and I to discuss. Obviously, with older ages and they're incurring high surrender charges, that's going to be an automatic decline as well, and extra scrutiny depending on what the surrender charge is. So those are the basics for automatic declines.
Sure. So the one thing that I wanted to kind of touch on, that I wanted to call out, is with respect to, you know, liquidity requirements for emeritus. So in order to even be considered for an annuity with emeritus, the minimum requirement is $25,000 in remaining liquid assets or 6 months worth of expenses in liquid assets, whichever is greater. So when we have a situation where, let's say your client only has $10,000 in liquid assets, that's where, like Amy touched on, is that we're starting to see these reduced purchase amounts to build up that emergency nest egg. So I just wanted to kind of call that out there, because I know that from time to time we do see those clients that have those lower liquidity pools. And I think sometimes, you know, some agents are kind of left wondering, well, why? What is the basis? So I just wanted to kind of give you a little bit of criteria on what we're looking for there. And this is a perfect segue about modified offers. So Amy, did you want to take it away on this one?
Sure. So this is just adding on to what Jen just talked about. So, you know, the minimum liquidities, the 25,000 or 6 months of expenses, whichever one is greater. If we're not seeing that, we're going to ask for a reduced purchase. Now, some of these, Jen and I kind of make a determination. We maybe send to home office first. If we're sending you an email for a reduced purchase, it's because they really don't fit the criteria. So for age 64 and younger, they can use up to 75% of their total liquid assets for the annuity purchase. And then for ages 65 and older, up to 50% of total liquid assets. We have a little bit of wiggle room. It becomes kind of a sliding scale, too much information to give here. Obviously, clients with a higher net worth or higher liquidity, you know, we have more wiggle room on here. So, you know, if you have somebody outside of these guidelines, definitely feel free to give us a call. And I want to make sure that using 75% of their total liquid assets doesn't mean just 75%. They still have to meet the minimum liquidity guidelines. So they kind of go hand in hand. It's not one or the other. So, you know, again, clients with higher liquid net worth, we have some wiggle room to take more than those percentages. And if we don't, then we will send you the modified offer for the reduced purchase amount.
Okay. So that's basically the suitability program in a nutshell, at a very high level, 30,000 foot level. So I'm sure you all have a ton of questions. I'm gonna stop sharing, and then Joe, I didn't know if there's any questions in the chat that maybe we wanted to go over, or how you wanted to kind of approach this.
Yeah, I think we've been answering the questions in the chat. I think you did it. You guys did a great job as always. You know, it's important that we really understand it. You know, Chris, you said something that I want to go back to. When you have to go back to somebody, and guys, you guys know this. You know, even in a non-FIA sale, right? If you have to go back to a client for something that maybe on the front end that you should have known that you didn't know and you missed. It does cause a little bit of doubt, right? It causes a little bit of concern. So you're not, sometimes there are things that you're not going to know and you're going to have to go back. So that's okay, right? But if you're really clean on the front end and, you're taking enough notes and you're asking the right questions, it's going to help you down the line as well. So we can get that information on the application, over to the suitability team. So we can get those apps, to Emeritus, so we can wait for the funds then, right? That's the fun part, right? Getting those funds in and trying to track down the money. So we need to make sure that we're doing everything we can on the front end to make sure that we don't have to go back to, Mr. and Mrs. Jones and say, hey, I forgot this. A couple of things that were brought up on last week's call that I thought that I would share again too. Replacements, we need statements, right? So just make sure at point of sale, you're asking for those. Driver's license, right? Unexpired, government identification. Make sure that you're getting that, especially when you're doing this, virtually and things like that. You need to make sure. So you don't want to go back to Mr. and Miss Jones and say, you know what? I need your license. I need a copy of your license. So make sure that you're doing that on the front end. PDFs team, this is a big one too. When the suitability team is asking for some information on the back end, and we're just taking a photo and we're sending that photo in. I mean, it's got to be legible. We've got to be able to see those. So the easiest way for us to do that is just scan, Genius Scan, get them into a PDF. Obviously we want to get them into Firelight as soon as we can. Sometimes I know that that doesn't happen. And you have to send over some documentation because, the suitability team is asking for it. Just, PDFs, right? We got to get those into PDFs. If you're struggling with, hey, Joe, how do I do a PDF? How do I convert this into a PDF? Feel free to give me a call. I'm not an expert, but I can figure it out. So we can help you with that as well, too. But looks like there might have been a question or two. Let me just check the chat here.
And I also wanted to add really quick, Joe, sometimes, something to think about too on these replacements, when you're replacing something with an existing income rider, moving to one of our products, if there's a significant income base, we are going to ask for the illustration to verify, that they're moving over better economic benefit to the client. So be prepared to look for, that, or have an illustration ready to supply us. And then I also wanted to stress, you were talking about PDFs, the importance of sending over PDFs that are clear and readable in all the pages, because we've had some situations where they've come over that they're either fuzzy or they're too small to read. So they need to be able to go into a scanning system and be readable for us. So I just wanted to make sure that we stress that as well.
Yeah.
I have a quick little on the PDF thing. There is an app from Adobe that you can download onto your phones. It has been a huge lifesaver because it will allow you to scan it straight into a PDF. It will ask you you can do multiple pages. And so it keeps it all as one file, and then you can send that file straight over. It's been great.
Appreciate that, Leanne. A little plug for Adobe. There's getting some royalties over there, I'm sure. But
Oh, I wish.
good for you. So, hey, any other outstanding questions? So
Well, while people are maybe, putting a couple questions into the chat, I did want to just bring to everybody's attention, if you haven't seen it already, we have done some significant work with Emeritus and have built in some suitability rules into Firelight. And so sometimes you're going to see these pop-ups that
yes.
display that give you the opportunity to kind of put in the information that we need. So for example, if you are indicating, that it's a replacement, you can provide the details right then and there, and there's pop-ups. And then, for example, if you unfortunately mark by mistake that, maybe my client doesn't have enough liquid assets for emergencies, there's a series of questions on the suitability form. A pop-up will display letting you know that we can't move forward with this application, but you might want to look at it again to ensure that you answered it correctly and maybe do a correction if not. So I did want to kind of put a plug in for Emeritus and the fact that we have done some suitability work within the system. We are planning some future enhancements, but I wanted to make sure everybody was aware that we're trying to make this as easy as possible for you all.
Great point. Absolutely, it comes up. You can see it. Awesome point. Appreciate that point out. And that leads me to this comment as well too. So again, I want to make sure that Leanne, I appreciate you chiming up, but this wasn't easy for you to learn the FIA business, right? You made some mistakes on the front end. You asked a ton of questions. But you put yourself in a position to have a level of independence, right, and success, and obviously a great relationship with the suitability team. And the reason why I'm saying that is because look, as insurance professionals, and you're all professionals, you have your license. Sometimes our pride and ego can get in the way. I got this. I know this. This is good. I'm going to put this in, and don't do that. Just don't do that. If there's a level of doubt, if there's like a question, maybe I don't understand this as well as I should, reach out to your FML. And James, I saw you just put something there. TDL, the FIA team. You know what I mean? Before you hit that submit button, right? Before you hit that button, we want to review these applications for you, with you, for a few reasons. One, to Chris's point earlier, you don't want to go back to Mr. and Mrs. Jones. Two, we want to help, get to the point where you're a Leanne McDonald, right? So you understand more. You have a level of competency in confidence that you can do this a little bit more independently. So it's sort of like a mentor program. So we'll help mentor you as you get these suitability and these applications, and you get these statements, and want to help Mr. and Mrs. Jones. Don't make the mistake of pride and ego getting in your way of losing an opportunity, right? Just say, I don't know, put a hand up. I need some help. I need some support, because that's the way we're going to get these in good order. The quickest way I know how is to ask for a little bit of help. We're here to help. We're here to support you so we can write cleaner applications. And it looks like I got an email. It looks like Carrie just submitted an app. Great job, Carrie. I'm just kidding, buddy. I see you down there. Anything else for the good? You know me well enough. Anybody else?
Joe.
Yes. Who's got one? Somebody who?
It's Pearl.
Hey, Pearl.
Hey, and so I might have missed this because I was on the phone. I'm so sorry. Amy, nice to meet you. You've been very helpful in the past to me. I'm just going to be adding funds, and he's overnighting the money, but I haven't filled out a suitability form because I wasn't aware. I apologize. So do I just download that from your website? I've done that in the past. Do I use that form, or do I find one in his account?
So a suitability form is not required for every additional deposit. The only time we require suitability, and I had put this in the comments, but I'll say it out loud. The suggested is when you have a client that wants to send an additional deposit or do an additional deposit, reach out to Jen and I. If it's just a basic check or money coming from a mutual fund account, we don't necessarily need a suitability form. We just need to make sure that based on the assets you had previously provided, that those assets were there and they're coming. The only time we're going to need a suitability form is not even a full suitability form. It's page 3, the comparison information on a replacement. That's the only time that we need a suitability form. So if you have a client sending in a $20,000 check, we don't necessarily need a replacement form or a suitability form. So that's why I'm saying kind of reach out to us depending on what it is, what their assets look like. We don't need all those things. We might have additional questions, but we don't always need a suitability form.
Wonderful. I'll send you an email. Thank you.
You're welcome.
Yeah, I want to, and I think somebody else had their hand up. So again, I think Amy, you put it in the chat. Just suitability help desk, right? Just go right to the help desk, ask the questions so you know the responses. We had one yesterday that we asked a couple of questions on with an agent. It's like, well, wait a minute, that's a little bit different. So we needed to go in this route. So make sure you're reaching out to the help desk to get the right information so you can have the right conversations with Mr. and Miss Jones. Sam, who had a question there? I can't.
I do, Amanda.
Amanda, go ahead.
Hi, I just wanted clarification. So for qualified funds and the person is over 59 and a half, are you saying that's a non-liquid asset because they'll have taxing of pulling that out? Or it is a liquid?
So
Well,
if they're under 59 and a half and over 59 and a half, and it's in either an investment like a brokerage account, mutual fund account, or an annuity out of surrender, it is considered liquid because of it doesn't have the same taxation if you are under 59 and a half.
Okay, I just want to clarify. Thank you.
What do you, any other questions in there, Sam? Nope.
Not that I've seen. I think you guys covered everything.
Well, we want to say, thank you again, to our partners over at Legacy, Jennifer, Amy, Chris, and James. Thank you for, hosting these calls. Just a little bit of a plug. We have a few more of these. They should be on your Outlook. They should be there, but we definitely send them out, a week in advance to make sure that you have the links. We post them on Slack as well too. We will house the videos. Thank you, Sam, for helping there with, and I think Michael's helping as well too. So thank you. We'll get these recordings out to everybody. But this is great information. This is what we need to do in order for us to have, better businesses, right? Run better businesses and help Mr. and Mrs. Jones. That's most important, right? When applications continue to take long for them to issue, you know what I mean? And Mr. and Mrs. Jones hasn't moved their money into a safe spot. Look what's going on today, right? Look what's happening today. So that's why we need to make sure that we're on point. These have a little bit longer of a tail. So we need to make sure that we're committed to making, Mr. and Mrs. Jones feel good about, the purchase that they made. So with that said, we'll give you, 15 minutes back. Appreciate the call, appreciate the time, and thank you guys. Appreciate it.
Thank you.
Thank